In the energy quadrant, taking a look at a weak rebound in the December WTI crude oil futures. Crude was higher today, but not by much and with very low volume. This is the first session higher in the last three. But overall, since crude oil tested the 200-day moving average, it's still down right around 11%, a little bit more than that actually. The high today, 69.13, that was up 1.6%. The low, 67.75, that was only down about 0.4%, 43 basis points to be exact. And with a little bit of time left in the session, we're still up about 0.5%. We had an OPEC report released overnight, and OPEC cut its forecast for global oil demand for this year and next year, marking its fourth consecutive cut to their demand outlook for 2024. Chinese demand accounted for the bulk of the 2024 downgrade, and speculation is now that they will push back the unwind of cuts even further. OPEC's output is also rising, according to the report, with Libyan production rebounding after being cut by civil unrest. OPEC Plus pumped close to 40.34 million barrels per day in October, up 215,000 barrels per day from September. Iraq cut its output to 4.07 million barrels per day, closer to its 4 million barrel quota, and Russia edged up in October by now 9,000 barrels per day, up to about 9.01 million barrels per day, according to the OPEC report. That is slightly above its quota. We also have some dollar strength, and the dollar rose to a 4-month high, as a matter of fact, so it's not really some dollar strength, it's real dollar strength. That's in the aggregate, making commodities more expensive globally. So what generally happens when commodities are more expensive, demand drops a little bit. So it's affecting crude oil in the way that it came off from its highs today, but you still have that weak rebound despite the continued dollar strength. But overall, it is likely putting pressure on crude oil, just like it is the other commodities.